Welcome back, everybody. This is another episode of Trading Gold Futures 101. All right, in my last video, I went over the difference between fair value gaps and inverse fair value gaps, how to find them, how to locate them, how to mark them out, and how to utilize them in your trading, okay? So today we're going to get into the difference between an order block and a breaker block, okay? So what is an order block? An order block is the last opposing candle before a swing high or swing low is created, okay? Why are these important? Because market makers usually will leave huge resting orders within these zones in which act as support or resistance in price action or order flow. All right, price will usually come back to these zones in order to refill those positions and to then push price in the direction that market makers want price to end up going. Okay, so what does an order block look like? An order block looks like something like this, right? What do we see here? We see at this swing low, we see the last opposing bearish candle before a swing high or a newer high is created, right? So what do? We mark out that last opposing or that last bearish candle, and we mark that out with our toolbox, our rectangle toolbox, right? And we drag that over to the side, all right? All we want to see is price revisit this zone and then treat it like support, right? You want to see these order blocks get treated as support and actually push price in a continuation model, either to the upside or to the downside, all right? So in this case, this is a bullish order block, all right? So right here, this is where a lot of market makers will leave a bunch of resting orders to then get filled and push price in a continuation model higher, right? So once we mark all this out, all we want to see is price come up, and then eventually come back down to retest this zone, right? Once you see that this order block or this zone is getting respected, all right, you could actually hop into these same positions as these market makers are hopping into down here, right? And this would be a nice continuation model, a very good execution in order to follow the plan that these market makers are instilling or creating for us. Okay, so what do we see once price comes back down into this zone? We see a nice clear sign of rejection or support in this zone, and price just continues to run all the way up, sweeping out all of these internal highs that was just created prior on this swing low, right? So you could have taken any one of these targets as your take profit margin and so on and so forth, right? So that is what an order block is. Now, I get a lot of questions, right? When does an order block turn into a breaker block, right? I'm gonna explain that for you guys, really simplify it so you guys cannot possibly be confused by what's going on here, right? So when does an order block turn into a breaker block or a BB, right? When that said support has failed and price pushes right through these zones, that is when a order block will then turn into a breaker block. I'm going to explain to you the difference. I'm going to explain to you how to utilize them because they could both be utilized in your executions and they could both turn out to be very good opportunities for you to hop into trades, okay? So when support is failed, price will usually come back up, just like an order block, and it will retest that zone before continuing in the direction it wants to go, or in the direction that that order block was broken, or that support has failed, okay? So I'm gonna show you guys a very clear example of what a breaker block is, okay? So what is a breaker block, right? It's the same as an order block, it's just one that hasn't been respected, one that has broken support, and then continued lower, right? So what do we see here? We see a nice order block here, an opposing candle before a swing high, all right? So we get this little bearish candle here. I'll circle it for you guys so you guys can see it a little bit better, right? So this bearish candle right here will be considered our order block, all right? What do you see once this order block is formed? We get a nice swing high, sweeping out these internal highs that were created prior to this order block being formed, right? So how do we utilize said breaker blocks, right? What do we want to see when an order block is getting turned into a breaker block? Okay, so the same kind of reaction you see in an order block, just opposite, right? So in an order block, you want to see price retest and actually reject in the same direction the order block was formed in, right? In a breaker block, you want to see a retest and rejection in the opposite direction that that order block was formed in, right? So this would be a bullish order block, right, where it actually pushed price higher. So for more times than not, you're going to want to see price push back up. That is a respected order block, right? When does it turn into a breaker block? When that support is disrespected and price actually runs right through that zone and then continues lower, right? So how to utilize a breaker block versus an order block? You're going to wait for that retest again. So it's not going to be the initial retest like an order block where price continues in the same direction. But what you're going to do is once support has failed, you want to see that support level get retested and treated like resistance, right? So when support is failed, what is it turned into? It is turned into resistance, okay? So as you can see here, price fails, the support fails in price comes back up, retests that new resistance level, and then continues lower, and you could have taken any short targeting any one of these external lows that were formed over here, right? So that is the difference between an order block and a breaker block. All right, I want you guys to take a screenshot of this so you guys don't miss a beat. This is the exact terminology that you will see everywhere in the industry, on social media, on YouTube. This will make it very easy and simplified for you guys to understand. It will make it that much easier to utilize in your live time trading, in your live time markups, in your back testing, in your strategy, in your practice, whatever the case may be. All right, mark them out, utilize them, understand the difference between them, study the difference between them. If you guys have any questions or concerns, please feel free to leave them down in the comment box, or you could always leave me a direct message on Instagram. I'll leave my handle in the description below, okay? Thank you guys all for your support. I love each and every single one of you guys. Till next time, peace.